Hello traders, the title of the video is top-down trading for yearly chart traders. Do you trade on the yearly chart? Maybe not, alright? But if you are a position trader, you will be trading the yearly chart and also the quarterly chart. The hedge fund, the big financial institution, okay, the banks, will trade on a yearly chart, on a quarterly chart, looking for a high probability trading setup. So a lot of traders may think that this video is not for them, which I can understand because they are not position traders, but they can use also the yearly chart because this is the biggest picture that we can see, okay, when we are analyzing a stock, a commodity, or a currency, a pair, all right? This is an essential tutorial. This is an essential tutorial that one must know, all right? How to trade on a yearly chart as a position trader, all right? So the first thing first, for some traders, they may consider this video a bit okay, advanced for them. So you can watch it, okay, think of it and leave it there if you are not yet considering yourself as an advanced trader. But I think it's an essential tutorial that I must post on YouTube, so those who want to become an advanced traders can learn from it. So the trading drill is always very simple. The trading setup, then the signal, then the low risk entry point. So trader may say, Joe, you always talk about the same thing, but this is it. The financial markets, the trading drill will never change. It's the setup, the signal, and the low risk entry point. So once we find the trading setup on the yearly chart, the signal, we must change time frame. We go to the monthly chart. Normally, the correct time frame for the signal, if we are using the yearly chart, we must divide the yearly chart into 22. All right? But we don't have that time frame. The correct time frame for the signal is a yearly chart divided by 22. But what we can do, because we have 52 weeks in a year, the nearest time frame that we can use is the 2 weeks time frame. Unfortunately, on this TC2000, I do not have a 2 weeks time frame. 2 weeks time frame. All right. It'd be nicer to have that. Okay. TC2000, if they can put 2 weeks, that would be so. Because we don't know how, okay, the exact time frame for the signal, talking about the yearly chart, is yearly chart divided by 22. We do not have it. The nearest to that time frame is 2 weeks, all right? Because 52 weeks in a year, we divide it into 2, we have 25 weeks, all right? Therefore, I will say that practically speaking, we can use the monthly chart. So yearly chart for the trading setup, monthly chart for the signal, and then we will use the daily chart for the entry. This is for position trading. If you do not want to use the daily chart for the entry, you can break it down to the hourly time frame. So you say, when you are about to enter the trade on the daily chart, you will consider again the daily chart as a trading setup. Then you break it down, daily chart. All right. Don't do that. Don't do that. Don't do that. Correction. Don't do that. Okay, because you break it down, daily chart and hourly time frame, but don't go to the 10-minute time frame. Normally we will say daily chart, hourly time frame, and 10-minute time frame. So I want you, if you're a position trader, don't enter the trade on the 10-minute time frame. You may do that, but if you want to, you can. All right. If you don't want to enter the trade on the daily chart, you can break it down: daily chart, hourly time frame, and 10-minute time frame. All right. But you can do it, and you can go daily chart, and then the signal on it hourly time frame, you use it as an entry. Because I'll prefer that you enter the trade for position trading on the hourly time frame at least. All right. If you do not want to enter on the hourly time frame, you may enter the trade on the 30-minute time frame, but don't go below that. All right. Because you want to remain in the trade for a long time. That's why we have the yearly chart, monthly chart, daily chart, the core. So you enter the trade on the opposition trade on the daily chart. That's it. Practically, that's why professionals do it. All right. So we enter the trade on the daily chart. Okay. Some people may say daily chart is too much. All right. Then we break it down. You can stop on the hourly time frame. So daily time, break it down to hourly time frame to enter the trade. It's up to you. Okay. But the trading drill, this is it. We're talking about the same thing over and over because it's trading exactly the same thing all the time. But different viewpoints, okay? So the trading setup, the signal, and a low risk entry point. In this case, yearly chart, monthly chart, and daily chart. Okay, so let's go to the yearly chart for this stock. All right. Norwegian Cruise Line Holdings, Epic NCL Hedge, November Charlie, Lima Hotel. I'm going to go to the yearly chart. So there was a trading setup here. Can you see a trading setup was here this year? So I'm looking at this candlestick by 2015. Okay, so you can see I draw my lines. We have a shadow on the top here. This is a bearish zone. So our trading setup in 2016 will be that priority to bearish signal below the bearish zone. Yes or no? Because of the shadow here. Now you can see that I highlighted tail of 2015. This is the orange band here. All right, so we'll say priority to bullish signal, okay, above the orange line, okay. So that's the tail of that candlestick bar. But there are different trading setup that we can use looking at this yearly chart because we highlight very often the high, the low, and the median line, which is the gray line here, looking for trading setup in the vicinity of any of those key levels. So we can use the high, the low, and the median line. Okay. One can also use the closing price. So in fact, for the yearly chart, if one yearly candlestick bar is closed and a new candlestick bar is open, if that new candlestick bar could not go above the closing price of the previous year, it's bearish. It's bearish until it reaches the median line. But if it goes below the median line, it becomes more bearish. So now, so the trading setup I'm talking about here in this case is that the price could not go above the closing price in this case. Here it is, 2016, it did open here and it started going down. It's bearish. So we have a bearish trading setup because the price did not go above. Okay. The bearish zone is stuck below the bearish zone. So the bearish traders are putting pressure on the price. It's like a barrage, so to speak, of orders to sell are placed in a red band here, and the price could not go beyond that red band. Okay? It was so strong, that bearish pressure was so strong, that even when we reached the support level, the price even pierced through that support zone, couldn't find the support. So now we have a new support level in 2016, which is the band that we can draw here and here. Okay, I don't want to draw it for 2016. So the point I'm making here is that at the beginning of 2016, which is this candlestick bar that is bearish, we have a bearish trading setup. So practically, position traders will go to the monthly chart looking for a signal to sell. I'm now on the monthly chart, so I'm going to place a vertical line at the beginning of 2016. That's the vertical, that's January 2016 right there, my friend. So we want to sell. One little trick is this, all right? One little trick. So the previous year, which is 2016, the price was 2015. The previous year was 2015. Now we are now in 2016, and the price stuck below the red band here. So we want the price. So now you see it breaks below the channel. You see the rising channel. It breaks below, and it tries to retest the channel. But the market prefer the moving average 14 that was turning. So it breaks below the channel and retest the moving average 14 there. You see now? Break below, retest the moving at 14. So what has happened here, because the moving at 14 or any moving average is a dynamic support or resistance level. So it breaks below the moving at 14 and retest it. That's what the price doing all the time. Now there was a comment today on one of our videos. They say you're talking about the same thing all the time, but this is it. The price doing the same thing all the time. He breaks below, okay, the dynamic support level, which is the moving at 14, and he found a resistance below it. So here, this is our signal here for the position traders. Below the moving at 14, retest. It did not retest the channel, but it retest the moving at 14. So at the closing price in March, so in fact, what's going on here? Yes, in closing price in March 2016, we will be saying that, okay, what we will do here, you see, once that candlestick is closed, we draw a line. Why do we need to draw a line? We draw a line because we want to be ready to sell and ready to buy. So we draw that line at the closing price of that candlestick bar that was retesting the moving at 14. As I explained to trader at the beginning, this video is for more advanced traders that want to position trade. So no question about it. Don't mark it down because it's not suitable to you. Even if you mark it down, doesn't matter. Okay. All right. Thinking let's use the pink line there. So we put a line at the closing price. So we'll say priority to bearish signal below and priority to bullish signal above, because if breaks below the moving 14, retesting it is a bearish trading setup. But if he finds support above the pink line, we will not ignore it. We will take the other side of the trade. But here it is, it did not. So our signal remain intact. This is our signal here, break below, retest. Now from here, so now we have, so the trading setup, the signal is now fired here, which means break below, retest. If the signal, so for instance, suppose we were here and the following month, the price start going up above the moving at 14, what does it mean? It means that the signal has failed. Don't even bother to look for the entry. If the signal fell, don't invent it, don't create it, don't force it. It's not there. All right? Okay. Now, the reason why I'm speaking like this, because when I was a new trader, sometimes I watch some video, I say, well, this thing does not make sense. What this guy is talking about doesn't make any sense. And then over the year, I realized that what these people were talking about was true, all right? So sometimes I'm speaking like this. I'm not speaking to advanced traders, because some traders say, George, you are repeating yourself too much, because they are advanced traders. They know what I'm talking about, and they say, George, move on, move on, move on, all right? And on the other hand, I'm thinking of other traders that are still learning, all right? So our signal is fired here on the monthly chart. From this point onward, we must go to the daily chart to enter the trade. If I go to the daily chart, you will not see this spot here, because it has been a long time already now, more than a year. You will not see that spot there on my daily chart, all right? You will not see it. I will be surprised. Okay, let's go. We are talking about this red spot there. Go to the daily chart. Hey, it's here, my friend. Can you believe it? It's there. Good. Very nice. Very nice. Here it is. You see? So on a daily chart, now we have the signal fires there. Now how do you enter the trade on the daily chart? You can see carefully here. There was a... Okay, let's see how you see. This is nice. This is good that we have the daily chart. I was thinking that we cannot see it. So I'm going to select this point, draw a line that's parallel to the first one, and extend it down. So this is the move to retest, okay, the moving at 14 on the monthly chart. Now we switch to the daily chart. It was not easy, to be honest, because you can see it was, you see, the price came out of the channel, that channel there, that blue, you see this rising blue channel, blah, 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 blah. It came out and retested it on the edge there. It was a bit messy. Here. To be honest with you, it's not clean-cut entry here. So personally, if I was here trading this, the way is so close to the channel, I will break it down to the hourly time frame. You see, because it's not clean-cut signal here. All right. If you couldn't enter here, which it did, it came out and retest gently here, not very, very good because it looks like a consolidation. If you don't like it, or some traders may just sell it and play their stop loss above the pink line. Well, if they know what they are doing, that's fine. But then, because this is the best place to enter the trade, all right? Now, it came out of the channel, but it did not move away from it. It's so stuck to it. You see, it came out and you retest it again here. I don't like that myself personally. Therefore, you can see here, okay, probably here you will be looking for, because there was a small consolidation again here. This is, you may miss the first part of the entry if you don't break it down to the hourly time frame here. Here you have to break it down to the hourly time frame. This is what I'm talking about. So you may enter, because it's not clean cut signal, you break it down to the next time frame, which is the hourly time frame. Otherwise, you will wait until you see another clear cut signal. Here it roll it down, and now it start consolidating. You will sell at the top of the consolidation. But again, if you were doing that here, it's again a higher risk, because you want your stop loss as a position trader to be behind this pink line here. So better scenario will be, as we come to the daily chart, it's no clean cut signal that we will prefer. All right, we must break it down to the next time frame, which is the hourly time frame, to enter the trade, because we want our stop loss to be behind the pink line. But if you do not want to do that, you will be entering the trade during this consolidation here at the top here. That's it. So you have the trading setup on a monthly chart, price stuck below a bearish zone, prior to bearish signal below that zone. That was the case. From the yearly chart, you go to the monthly chart, waiting for a clear cut signal, break below, retest, turn around, or price forming a bearish chart pattern. All right. Those are the signals we are looking for, or break below a rising channel and retesting the rising channel. We talked about all this before. That's how we sell. Break below normal horizontal channel, retest. Break below a channel, retest. Break below a moving average, retest. All right. Price forming a bearish chart pattern. Those are the signals after a bearish trending setup. Okay. So those are the things the price doing all the time. The same thing over and over and over and over. All right. So if you don't want the same thing, you want something new, you're going to create a new stock market. Break below, retest. All right, so this is it. How long have I been talking to you now? We want to keep it very short. That's it. We are reaching our limit now, 20 minutes. So a trading setup was in place on the yearly chart. Price stuck below a bearish zone. We want to sell. Okay. Here it is, 2016. We go to the monthly chart. We are position traders. Our signal will be on a monthly chart. Break below, retest. Right? Carefully break below the rising channel. Try to retest it, but couldn't retest it. But instead, retest. Okay, so you may also say that it break below this key level. You see, there was a consolidation on the top here on the monthly chart. If you don't have the moving of 14 on your chart, what you will see, there was a consolidation here in this section between the red line here and the pink line. So it probably break below the pink line and was retesting here. All right, if you do not have moving at 14 on your chart. So that's your signal. Then you will go to the daily chart, looking for the signal for the entry. The entry is another signal, but on the entry time frame. All right, so now again we have that channel, break below that channel now on the daily chart. Retest is not very clean cut. Personally, I'll break it down again to the hourly time frame to enter the trade. Sometimes trader, as it came quite close, you see that okay, it's coming out. It's quite risky here. Some trader may sell it and play the stop loss there. It's not very good, but here it worked beautifully. Or here you see the moving average 14 turning, price pierce through it. This daily chart candlestick bar close below the moving at 14. All right. See how it start turning and the movement break below. It just came out, but we prefer break below, retest. All right. So this is about top-down trading for yearly chart traders, hedge funds, big financial institutions, banks, private investors that want to hold position for long term. They can remain position for 6 months, for a year, even more. All right. So they use the yearly chart. For ordinary day trader, they may think that, oh, this video is not for me. Swing traders may say this video is not for me. But it's very important to understand how position traders are trading, because they are moving the market. If you are day trader, scalper, okay, swing trader, and you do not know how those position traders are trading, you will be fighting against them, and you get into trouble, and they won't like you. You want to know how they are trading, how they enter the trade, so you may follow them. All right, like you are like a small fly. You are a fly following the elephant. All right, that's what you are doing as a day trader, as a swing trader. So the swing traders are providing the momentum for the day traders. All right, the day traders are providing the momentum for the scalpers. All right, the position trader, the gigantic market participant, are providing the momentum for anybody else. But you want to know, isn't it? So they say, I'm a scalper, I'm a gateway trader. I don't want to know anything about Fibonacci. Don't do that. Don't get into that. You want to know, of course. All right, you want to know. If you do not know how other traders are trading, how can you compete with them? They will, okay, smash you. You don't want to do that. You want to know exactly. So when we are talking about sophisticated market participants, those are market participants that know everything. They are like eagles. They know area way, they know Fibonacci, they know fundamental analysis, and they can play the game on any field. All right, so think of it, watch it, all right, understand it, and know how those traders are trading. Okay. If you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. If you find this video useful, feel free to give us the thumbs up. If you think this is another useless video, let us know by giving us the thumbs down. Alright, if you think this is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about top-down trading for yearly chart traders. Happy trading to you all, and speak to you soon.